So today we're gonna learn about index. An index is a method to track the performance of a group of assets in a standardized way. So asset meaning company. Indexes typically measure the performance of a basket of securities intended to replicate a certain area of the market. These could be a broad-based index that capture the entire market, such as the S&P 500 or Dow Jones Industrial Average, or more specialized, such as index that track a particular industry or segment. So S&P 500 is also considered index. Oh, I didn't know about that. So S&P or Dow Jones는 index. These equal index. Indices. S&P 500 is an index of indices. Oh, thank you. S&P 500 is an index of 500 big companies. Oh, really? Index is like Twitch category. All the just chatting, all the Fortnite etc. All the Fortnite streamers are individual and they have a price. That could be. Oh, I'm a company. Oh, that's a good. Is that good comparison? Isn't index more of like the category? Okay. Nasdaq is technological companies. So does each index have like a grouping? Purpose grouping? You know what I'm asking? I can't phrase my question well. So S&P 500 is the top 500 popular company. Big company. Nasdaq is technological company. Group of technological company. What about Dow Jones then? What is this one then? This is industrial. So any like factory, a 30 big company. Okay, continuing the key takeaway. An index measures the price performance of a basket of securities using a standard. Okay, we just talked about that. How come they spelled indices like this? And that's with a C. Which one's right? So indices in financial market are often used as benchmarks to evaluate an investment performance against. Passive index investing has become a popular low-cost way to replicate the return of popular indices such as S&P 500 index or Dow Jones Industrial Average. Passive index investor has become a popular low-cost way. So that's why a lot of people say, oh, you should just invest in the index because they're a bit safer but less exciting to earn some money. That's why there's always price for S&P 500 and Dow Jones because they're indices. Okay, so understanding indices. Indices are also created to measure other financial or economic data. Okay, such as interest rate, inflation, or manufacturing output. Indices often serve as benchmark against which to evaluate the performance of a portfolio returns. So when they're saying it's to serve a benchmark against evaluate the performance of a portfolio, it's like since each indices have a purpose or like they have like a grouping, they compare that with a certain, that's like the basic measurement or like, you know, and then they compare it with other companies. So if like Netflix is doing better than S&P 500, it's above standard because index is kind of like the standard. No, is that what I'm kidding? Did I say that right? Whenever someone says they want to beat the market, they mean beating an index. Whenever you look at a mutual fund or ETF, they often compare them to the index. So this is kind of like the standard for a certain category. One popular investment strategy known as indexing is to try to replicate such an index in a passive manner rather than trying to outperform it. Oh, so you can try to replicate an index. An index is an indicator or measure of something. In finance, it typically refers to a statistical measure of change in a securities market. In the case of financial markets, stock and bond market indices consist of a hypothetical portfolio of securities representing a particular market or a segment of it. Stock and bond market indices consist of a hypothetical portfolio of securities? But then here they're saying the S&P 500 and the Bloomberg blah 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 index are common benchmark for the US stock market bond. But they're saying you cannot invest directly in an index? What does this mean? How come? I thought you could invest in S&P 500, but now they're a hypothetical portfolio? What's the difference because index is a group of company, but they have a separate fund. So you can invest in the fund, not the group of company. 뭐지? What the heck? You can't invest in an index. Index is just a list, but you can invest in the index fund slash ET. What's it? That follows the index. So it's S&P 500 index fund. Yeah? You invest in a portfolio that is made. The replication then is the fund. In reference to mortgages, it refers to a benchmark interest rate created by a third party. Each index related to the stock and bond market has its own calculation methodology. In most cases, the relative change of an index is more important than an actual numeric value representing the index. For example, if the FTSE 100 index is at 6,670.40, that number tells investors the index is nearly 7 times its base level of 1,000. However, to assess how the index has changed from the previous day, investors must look at the amount of index has fallen, often expressed as percentage. Cause they have their own calculation methodology, so they don't care about the number. Like, the number doesn't represent anything. It's the actual percentage of how much it fell that represents it, right? I'm guessing that's what this section means. That's why maybe some people always say don't look at the actual number, but only look at the percentage, because the number might not actually mean anything. Then index investing. Indices are often used as benchmark against which to measure the performance of mutual fund and exchange traded funds, ETF. For instance, many mutual funds compare their return to the return in the S&P 500 index to give investor a sense of how much more or less the manager are earning on their money than they would make in an index fund. Indexing is a form of passive fund management. For instead of a fund portfolio manager actively stock picking and market timing, that is choosing securities to invest in and strategizing when to buy or sell them, the fund manager builds a portfolio wherein the holding mirror the securities of a particular index. The idea is that by mimicking the portfolio of the index, the stock market as a whole or a broad segment of it, the fund will match its performance as well. Okay, so now this paragraph is talking about the indexing definition, which is a passive fund management. Instead of fund portfolio manager active stock picking and market timing, which is choosing securities to invest in and strategizing when to buy or sell them. So is this the ETF or is that something else? Basically, it's saying a fund manager will create a fund that will mimic the index performance, so fund price goes up and down along with the index. And that's called indexing? Whoa, isn't that the same thing as what they're talking about the index fund? And that index, since it's just a group. I feel like they're so repetitive on what they're saying though. 와, 이씨 어렵다. 와. So you have so who's this fund manager then? So there's this so when I'm indexing, there's this fund manager who builds a portfolio to mirror a certain index, which could be S&P or Dow Jones or blah blah blah, other things. And that's indexing, where this person helps build a whoa. Okay, so indexing is building a list of stock. Fund manager is not actually a manager who comes out. So indexing is creating a portfolio that mimics index, any type of index. What's confusing me is, so you know how index is a group of companies, but isn't also ETF a group of companies too? So what's the difference? Is there a difference? Or I guess ETF is actually like you could actually trade it, but index you can't, and you have to, if you want to invest in an index, you have to buy their fund. 되게 어렵네. Oh, my brain. Oh, too much brain usage in a day. Okay, well, there's index example, so I'll try continuing and see if maybe the next paragraph it makes sense, and then check the example, and if it still doesn't make sense, we'll try to figure it out. Okay, so since you can't invest directly in an index funds are created to track their performance. These funds incorporate securities that closely mimic those found in an index, thereby allowing an investor to bet on its performance for a fee. An example of a popular index fund is the Vanguard S&P 500 ETF, which closely mirrors the S&P 500 index. So ETF is a type of mimicked index. Oh. Fund managers are real people. They work for investment company and work on that specific fund. This is saying what we've been saying. An index fund is created when it will go up. Yeah. So ETF is a mimicked version of an index. Is that the right definition of ETF? That's what I'm asking. I understand that since you can't actually invest in an index, you have to like create either a fund, mutual fund, or an ETF. So then the correct definition of ETF is that it's any type of mimicked index. Well, is an index also group of securities? I guess there's also different types of index then. ETF, sorry. Because index is also group. ETF is also group. Well, ETF you can trade, index you can't trade. ETF can be like 5 health companies and 5 electronic companies. So who makes ETFs? Maybe we should have to learn about ETF too. Yeah, where do we start? Okay, but I get it. Since we can't. What's the list versus group? So maybe list is longer and group is smaller. Think of ETF and fund as a container. And what do I think of index as then? So index is just a list, and then within the list there's different ETF created, and especially for VOO, the VOO one, that one is S&P 500. mirrored index group. Think of index as a mix of stock that has been mixed to a certain flavor of drink to put into a container. So they're somehow related, but I guess how they're related isn't connecting the dots for me. Index is a mix of stock that has been mixed to a certain flavor of Mongolia. Let's continue. So when putting together mutual fund and ETF, fund sponsors attempt to create portfolio mirroring the component of a certain index. Wait, so I have a question. So do you put different type of indices and make it into an ETF, or is it vice versa, where you have the gigantic list and you pick some of the securities and make it into an ETF? Okay, index is a menu at a restaurant. You order food is the ETF. The sweaty guy in the kitchen is the fund manager. Ah, so then for the VOO, when you order the food, this for VOO, it's like ordering the whole menu. Let's say it was the 500 S&P 500 restaurant, and in the menu it had all of 5 S&P 500. So then you order the whole thing, which becomes Vanguard ETF edition. You know how they have set menu? Like McDonald's. Ah, it's like McDonald's. You know how they have like set menu? Isn't that kind of like what ETF would be? Someone make a fund ETF that is similar to the index. Someone makes a fund, but then you don't like one of the food items, so you tell your friend that item is trash. It's called yeah. Instead of ordering the whole food, you can get a tiny portion of everything from the menu, and that tiny portion represents the whole food. What? That tiny portion represents the whole food. The tiny portion is the index. Why are there too tiny? Cody, retype and repost. So continuing, when putting together mutual fund and ETF, okay, fund sponsor attempt to create portfolio mirroring the component of the certain index. Yeah, because you can't, because index is just a list. This allows an investor to buy a security likely to rise and fall in tandem with the stock market as a whole or with a segment of the market. Index shows a performance for a group of company. An ETF tries to mimic an index so that the price goes up and down whenever index performance goes up and down. Fund sponsors choose certain companies so that the mimic. So when you're saying they just show performance, is that like a type of metric that they're showing, or is it just it's just like grouping of a company, like just a list, like it has like JinriCo, like, you know, like McDonald's, Netflix. That could be index, and we can call it like Jinri 500. Jinri is a favorite 500 company, and that would just be index. Contains of like Lucid and blah blah blah. Just that, done. And then in the ETF, it'll be like, we'll call it like Jinri's future car, which contains like Lucid, Jinri's future car ETF, containing like Lucid or Porsche or Bugatti. That's ETF. 3 of them. And this I can invest or not, depending on how well this company does. Oh! So if I make this, you can invest in Jinri's ETF whenever, but you can't invest in Jinri's future, Jinri's favorite. Is that why they have YXYJ embedded in SP? That's why it's SPX, SPY, SPZ, because those are ETF for the SP 500, which they made different groups into from the list. Ah, light bulb. if I comparison, Jinri's intern 500 is 500 list of interns, and I can make like stock intern ETF, then it'll be everyone who's watching me right now. And then if I did stock or like IT intern ETF, would be all the IT intern, and you guys have stock price, which is like how much you guys come in when I'm doing that stream. Oh, that's so weird now, but okay. The fund also can't be exactly like the index at all times, since they actually have to buy and sell the individual stocks in the fund to maintain the fund. Yeah, because they have some type of calculation, so it's not always completely exact. So example, do we have to read the example? Because I think I know it or so well now. So S&P 500 index is one of the world's best known indices and one of the most commonly used benchmark for stock market. It includes 80% of total stock traded in the US. There's also Dow Jones, well known, but that's value of just 30 nations publicly traded companies. There's also Nasdaq, Wilshire, wow, and Bloomberg, blah blah blah. Like mutual fund, indices, annuities are tied to a trading index. However, rather than the fund sponsor trying to put together an investment portfolio likely to closely mimic the index in question, these securities feature a rate of return that follows a particular index, but typically have cap on the return they provide. For example, if an investor buys an annuity index to the Dow Jones and has a cap of 10%, its rate of return will be between 0 to 10% depending on the annual changes to that index. Indexed annuities allow investors to buy securities that grow along with broad market segment or the total market. You can do what X Twitch streamer. It will be like you will have entire Jinri viewer index, Jinri IT index, Jinri Oya index. So Jinri viewer ETF would mimic the entire stream success. Jinri IT ETF will reflect the IT stream if Ooh, wait, so can we make Jinri index then and create ETF, and maybe for this they can measure. So in your example, the Oya index will consist of maybe just a stream of when I did Oya, when I did IT. Then what would be the stream success in that? How would they reflect it? It's like how much viewers came in? We should make that. That sounds fun. But can that also... That's why you guys always said to, if you guys, that's why people say always invest in ETF if you don't know, because it's much safer than, because there's a bunch of companies involved in or inside an ETF. So conclusion, correct me if I got it wrong, but I understand index as a list of companies, or as you guys said, menus, or yeah, and then from this you can pinpoint, you can pick and choose to make it into an ETF, which we will learn about next week. But as long as we understand that you can't invest in an index, and so there are different mutual fund or ETF that mimics the way how index move, and that's where you invest in. But sometimes the mimic, it's not exactly copied, so there might be some issues with that. But as long as that's the overall definition of what index is all we need to know. Ta-da!